What's up, guys? How are you guys doing today? Welcome back. Welcome back to another live stream. Okay. Can you guys hear me or see me? I cannot see myself quite yet. And we have some people on the live chat. There you go. I'm live. We're live. Hello. Please drop a comment down below and let me know what stocks you guys want me to go over. Today we had another roller coaster ride. Once again, guys, we are seeing a lot of volatility. Fortunately, right? That opens a lot of trading opportunities when we see volatility. And that is what we are seeing as of now. And the markets, Stephanie, hello. Sir City, Ginvels, there you go. Palantir, I already have my first request. The Messi of AI. We'll go over Palantir, not a problem, sure. Okay, in the meantime, guys, let me make a summary of what happened today in the markets. Russell 2000 went down 0.26%. The Nasdaq went down 0.52%. By the way, guys, I think that I didn't share the link in the main chat. Let me do it now. So hold on for a second. I can do it quickly here. Hold on. Just give me 1 second, guys, so I can share the stream on the main chat. There you go. Okay, going live now. Going live right now. Okay. Going up. Okay. There you go. I did it. Cool. Okay. Palantir, King, Spy, as usual. Thank you. Yeah. It's been a very generous week, guys, in order to trade the Spy. So you guys can notice that I have been very active on Discord. Whereas when we have, boring trading sessions, I am not posting much information on Discord. But I mean, take a look at the posts, at the information that I posted today, guys. Take a look. This was this is all the information that I posted today. Take a look. I was super active, guys, obviously. We were taking trades left and right with the Spy. I will go over some information that I posted here. It was another very fun trading session. So today we had yet again another red day in the markets when it comes to the Spy, but it wasn't, a bloodbath type of situation. The Spy or the S&P 500 only went down 0.22%. By the way, tomorrow we have OPEX. We have monthly options expiration. That's a day in which, usually weird stuff happens. So we have been having very volatile trading sessions, and maybe the fact that tomorrow we're going to have OPEX or monthly options expiration might imply that volatility might pick up even further. So that is good. That's what we are looking for as traders. When it comes to the sectors of the markets, take a look, guys. We had a mixed day. Some sectors did go up. Utilities, communication services, consumer staples, financials, and materials, and also real estate went up, whereas healthcare, energy, industrials, consumer discretionary, and technology went down. Something that is worth to be pointed out here is the poor performance of technology, guys. Take a look. This is by far the most important sector of the markets, and it went down today 1.14%. So some sort of mixed day, and maybe we can make a case that the markets are trying to look for some sort of at least short-term bottom. We will see if they can hit it maybe tomorrow. What happened to Netflix? They posted a blockbuster report, but in the case of Netflix, guys, and I was sharing this thought with the guys of my Patreon. Netflix posted this earnings report on the worst possible day because the markets are in a corrective phase. And when the markets are in some sort of corrective phase, even if you exceed expectations, usually you take a hit. So that's what happened. They posted a phenomenal earnings report. So that might be a dip that, if it happens to last until tomorrow, might end up getting bought up, depending on whatever happens with the markets in general terms. Okay. Guys, let's take a look at the work, at the stuff that I posted today on Discord, because I think that I was able to call out some good trades, and hopefully some of you guys were able to take advantage of that information. So let me pull up here my Discord channel. Take a look. So this is my pre-market commentary, and this was the first trade that I told you guys about. I said at 11:48 a.m. Take a look. No, not even that. 12:42. Yeah, 11:48 a.m. I said, guys, so far a tiny pullback. If 501.85 is broken to the downside, puts out on the table. Let's reconcile this with the technical chart of the SPY. So 11:48 a.m. Take a look, guys. At pretty much noon, 12:03 p.m. Let me go a bit. 501.80. Take a look. So I told you guys at 12:42 p.m. TNX is on fire. I had told you before at 11:48 a.m. that if 501.85 was broken to the downside, puts were on the table. If 501.85 is broken to the downside, puts out on the table. I posted this information at 11:48 a.m. Then at 12:42 p.m. I told you TNX on fire, guys, and I am going to tell you guys about the 10-year Treasury yield in just a second. No good for the bulls. Take a look at the time, 12:42 p.m. And I said closing candles below 501.80. $501.80. Elmo is on the house. You guys can tell the Elmo. This, you guys recognize this Elmo gift, right? So this was signaling, bad consequences for the bulls. And take a look at what happened, guys. So I posted this information at 12:42 p.m. Let's reconcile this with the technical chart. Take a look. At 12, I posted this information when the SPY was trading at 502.05. Take a look over here. Okay, I am pointing out this level with my mouse. So at 12, let me see, 501.80 over here. There you go. Look, at 12:57 p.m. over here, the SPY finally broke 501.80 to the downside, $501.80 to the downside. And I told you guys, take a look, at 12:42 p.m., just like, I don't know, this was, let me see. So this level was broken to the downside. Look, at 12:48 p.m., exactly, guys, I called out this short trade on the SPY pretty much to the penny. Again, I said 12:42 p.m. Closing candles below 501.80. Elmo is on the house. And take a look at what happened, guys. The second, $501.80 was broken to the downside. This was a collapse of the SPY. And then I said, pretty much this was the same post. Yeah, 12:42 p.m. 498.90 is the next important level for a bounce. So I told you, pretty much grab puts if 501.80 is broken to the downside and try to play a bounce back up trade at 498.90. So let's see what happened here, guys. Let's reconcile that information with the technical chart. So 501.80 was broken to the downside at 12:50 p.m. Let's just put it that way. And take a look at the spot at which the bulls found support at once this massive drop occurred. Take a look. 498.88. So I told you pretty much grab puts if 50180 is broken to the downside. And I was telling you guys about this level since 11:48 a.m. Take a look. Because the first post, or let me see, this was pretty much the first post that I told you guys about 50185. 11:48 a.m. Then I told you, hey, closing candles below 50180. Elmo is in the house. And then I told you 498.90 is the next important level for a bounce. This is pretty much, guys, and I don't wanna tune my own horn here, but this is pretty much exactly what happened from 12:48 p.m. until the SPY bounced back up at 1:46 p.m. right at 498.90. So take a look. And then I think that I had another interesting call out here because I took a trade with puts of the triple Qs, but I had another one over here, guys. So let me see if I can see it below. Let me see. Okay, at 1:43 p.m. I said if 498.9 is broken to the downside, the selling pressure could accelerate. That was at 1:43 p.m. 498.90. 1:43 p.m. And let me see, 1:43. And take a look, guys. So they broke 498.90 to the downside. They ended up breaking it at 2:10 p.m. And they bounced back up, and then they had another big drop down to 498.56. So this was a critical level for the SPY. And let me see if I had any other call out that I can tell you guys about. Let me see. 12:51. Well, so I think that I called out, here. Let me see. When they had the first bounce, and sorry for the, improvisation here, guys. You guys know that I am improvising everything here. So when they bounce back up, I told you guys, take a look. At 1:27 p.m., 501.25 is overhead resistance here, guys. Take a look. 1:27 p.m. Let's see what this bounce was about. And they bounce up to, from this drop. They didn't feel, no, they feel that gap later on today, almost to 501. This was into the closing bell. So, for any of you guys that is not familiar with the stuff that I am posting on Discord, remember that I have my own Discord channel on our server, Alvaro, and I am pretty much narrating the trading session from the beginning. What I can even say from the pre-market session until the closing bell, pretty much. So you guys can find valuable stuff throughout the trading session if you take a look at my Discord channel. Okay, I appreciate all your umpiring work. Yes, I am calling balls and strikes. There you go. Okay, if we take a look at the SPY, guys, what do we find here? So far we have seen a pullback of almost, today we can pretty much completed a 5% pullback here in the SPY, guys. So take a look. Yeah, this is a 5.20% pullback. Keep in mind, guys, that when people, for a beginner, how is best to read these hands? For the most part, I am letting you guys know the areas of interest of either support or resistance. Okay, I am providing you guys the information that you need in order to make your own decisions. That's what I am doing throughout the trading session. So the call out that I just showed you guys, it was very evident. I mean, it was very explicit here, guys, right? I told you. Take a look. Closing candles below 501.80, almost in the house. And I said before that at 11:48 a.m., if 501.85 is broken to the downside, puts out on the table. This is exactly what happened, guys. And then I told you, 498.90 is the next important level for a bounce. So I am not calling out a specific trades like, hey guys, I don't know, buy this or that call or this or that put, but I am I am suggesting to you what you guys should be doing, as you guys can see over here, okay? Support would be for a call, and if I tell you guys that if any level is broken to the downside, puts out on the table, you just need to keep an eye on that level. And if that level is broken to the downside, then you guys have to make your own decision, okay? Alvaro is telling me that if this level is broken to the downside, puts out on the table. Today, this call out worked out to the penny. Both the support being broken to the downside and the potential spot for a bounce back, for a bounce in the northern direction, as you guys can see over here, 498.90. Yeah, I am giving you guys the information so you guys can make your own decisions. Okay, I am pretty much teaching you guys how to fish. I am not fishing for you guys. Okay, but I am providing you with the information that you need in order to make your own trading decisions. So I actually took this trade, guys. Take a look. I was able to grab triple Q puts. I ended up making over here $144, as you guys can see. Okay. Circling back to the SPY. What happened here? So we have, as of now, a decent pullback of 5%. Okay. At today's low, the SPY had retreated pretty much 5%. Some people are talking about a correction. For the SPY, in order to have a correction, we need a drop, or we need a retracement of at least 10%. Can that happen? Of course it can happen. But, I think, and this is my personal opinion, and obviously I could be mistaken, and I don't mind being mistaken, I think that the market or the SPY is looking for some sort of short-term bottom. Or we can say that the markets are looking for, or the SPY is looking for, some sort of decent relief rally, quote unquote. Okay, and then maybe we can keep going, down further. So I have two potential spots to the downside over here, guys. This blue line that you guys can see is the 100 period moving average, or the 100-day moving average. Okay. As of now, the 100-day moving average is signaling 492. 492 happens to coincide with a previous resistance back from late January. So this is a spot that if happens to be visited quickly, maybe tomorrow, I don't know, maybe on Monday, maybe they keep killing the tape. If we happen to see 492, I am expecting down there a good old bull-bear battle, in which I think the bulls are going to be making the most of it, and we could be seeing some sort of acceptable relief rally, maybe one or two green trading sessions. If I zoom out, guys, over here, we can see that the SPY is still trading above both the 200 and the 100-day moving average. Both moving averages are upward sloping, so that's bullish. But at the same time, we are making lower highs and lower lows, and the 5-day moving average is downward sloping, and we are way below the 20-day moving average. So maybe we can make a case over here that the 100-day moving average is going to act like a magnet. It could be acting like a magnet. This is possible, guys. So a test of 492 is, in my opinion, in the cards. I'm not saying that we are going down there, but it is possible. What do the bulls need to do over here in order to avoid paying a visit down to this area, 492? They have, first of all, they need to recapture this downward sloping 5-day moving average, so they need to close one or two trading sessions above 503.64, 503.50, $503.50. This could be kind of validating some sort of relief rally that could last, I don't know, maybe one or two trading sessions. But as long as the bulls remain trading $515, which as of now is a level that coincides with the 20-day moving average, this pink line that you guys can see over here, we can make the case that, and especially in minor time frames, the bulls are guilty until proven innocent. So this technical chart of the SPY is suggesting, as of now, more downside, and that could be the case. And in my opinion, we are about to see I would say that sooner rather than later, some sort of acceptable relief rally in the SPY. I have two potential spots to the downside from which I would be trying to play some sort of swing trade with maybe call options of the SPY. So those two spots are, guys, and put this down on a sticky note. 492, 100-day moving average, and say that they are killing the tape, like brutally killing the tape. And everything is going down, I don't know, and panic is taking over the markets. If they happen to break 492 to the downside quickly, I don't know, maybe tomorrow, maybe on Monday, I don't know, maybe Israel attacks Iran and the markets freak out because World War III is going to kick off and stuff like that. So I think that the lowest they could go before seeing some sort of acceptable relief rally would be 488. If we happen to see 488, again, in the short term, tomorrow, Monday, Tuesday, you can mark my words, I am going to be an aggressive call options down there, 488. So these are the two levels that I am keeping an eye to the downside in order to play some sort of swing trade bounce, okay? But we'll see what happens, guys. And keep in mind that since the markets are starting to have a, let's say, corrective narrative, bad news are going to be highlighted over here. So bad news tend to be accentuated for whatever reason, guys. I don't know. Israel is going to attack Iran, and yields are going higher, and that is very negative for the markets. And the Fed might not cut rates as soon as most people believed and stuff like that. At some point, and if they keep killing the tape, they are going to at least give us a tradable, I would say, short-term bottom, at least. So this is going to happen, I would say, sooner rather than later, in my opinion. And well, let's see if we can catch that bottom, guys. That would allow us to take a good swing trade with call options, maybe of the SPY. Okay. Well, so I have Palantir. You guys want to ask me about Palantir? By the way, before going over some individual stocks, I wanted to tell you guys about TNX, the 10-year Treasury yield. I have told you guys about TNX in the past, but this is, for the most part, guys, the main reason why the markets have been going down. So this is the 10-year Treasury yield. Yeah, you guys can see the ticker symbol over there. So what is going on over here, guys? We have two important indicators when it comes to the bond markets in the stock market. So we have TNX, which is the 10-year Treasury yield, and we have TLT. TLT is pretty much a Treasury bonds ETF from 20 years and on. Okay, so if you guys check on the check on the Qs, the ETF of the Nasdaq 100, take a look. In the case of the Qs, this index, you guys know that the triple Qs track the Nasdaq 100. Over here, and so far, we have seen a 6% pullback. And something that is worth pointing out is the fact that the Qs are testing as of now the 100-day moving average, which happens to be upward sloping, and that implies that this moving average could be acting like a potential support. Let's just put it that way. So, and most of the pullback that we have seen so far since this, I don't know, I would say corrective phase of the market started out. So most of this pullback has to do with profit taking, and you guys have seen that, right? So AMD is getting killed, and NVDA has pulled back. Actually, in NVIDIA, I think that NVIDIA as of now is in correction territory. And I don't know, there's also profit taking in software stocks such as CrowdStrike and such as, I don't know, Palo Alto Networks and stuff like that. So most of the profit taking that we are seeing as of now is coming from the year-to-date winners. So what is going on over here, guys? If yields go higher, the temptation of many market participants of moving their money that could be invested in the stock market into treasury bonds becomes larger. So go figure this, guys. As of now, a 2-year treasury bond of the United States of America is paying a yield of almost 5%. 5%, no risk at all. So why would anyone would be investing their money in the stock market, which is risky, obviously, when you have, U.S. Treasury bonds paying a yield of 5%? So most of the pullback that we have seen so far has to do with this guy, the 10-year Treasury yield. Okay, if the 10-year treasury yield keeps going higher, we might still see more downwards pressure in the equity markets. This is pretty much possible. Okay, this is the main factor that is putting downwards pressure over the markets as a whole, and especially over tech stocks and most of the stocks that you trade. The Palantirs of the world and the SoFis of the world and the NVDAs of the world and so forth. So whenever we see some sort of, I would say, short-term bottom in the SPY, we need to see the 10-year Treasury yield pulling back. Take a look at this technical chart of DNX, of the 10-year Treasury yield. Upward sloping above all the moving averages. We can see over here an upward sloping 5-day moving average, 20-day moving average, which is also upward sloping above the 200 and the 100-day moving average. This chart looks extremely bullish. And we have a potential gap to the upside up to 4.80%, which happens to be a previous resistance in the case of TNX or the 10-year Treasury yield back from early October. If this gap happens to get filled, we are going to see more downwards pressure in the equity markets. So maybe this gap gets filled up to 480%, and this is the reason why we could be potentially paying a visit, in the case of the SPY, down to the 100-day moving average over here, 492, or maybe the other level that I told you guys about, 488. Okay? So you need to keep an eye on TNX, and for the time being, this indicator, the 10-year Treasury yield, is inversely correlated with most of the stocks that you guys trade. So keep an eye on it, guys. Okay? TNX, 10-year Treasury yield. Okay. So is Palantir the only stock that I am going to go over today? Let me go over Palantir, PLTR. Let me see. 5:12 p.m. Okay. So in the case of Palantir, goes down today 0.84%, and it closed the trading session at $21.13. Not a good looking chart. We can make the case that the bulls still have an argument over here because they are trading above the 200 and the 100-day moving average. The 100-day moving average is upward sloping, which is, let's say, hopeful for the bulls. Let me draw a line over here. So, wow, this is going to be pretty much the last line of defense, guys, for the bulls. In the short term, this 100-day moving average, they could be bouncing back up from here. You guys are looking at $20.70. Let me zoom out here. I think that this level is a previous. No, they are below the previous 52-week high. But take a look, guys. Over here, we have a coincidence. This is a big level for Palantir, guys. If Palantir can hold $20.50 as support, you guys are looking at the convergence of the 100-day moving average, which is upward sloping. That could benefit, or that could help the bulls in order to find support over there. But this 20-day moving average is also coinciding with a previous resistance back from late November, and also a previous resistance back from mid-November of last year. So this is a place from which Palantir could be bouncing back up. I wouldn't be guessing a bounce from there. I would rather see a bounce from this 100-day moving average, but a recapture at the same time of this downward sloping 5-day moving average, this white line that you guys can see over here. So I would rather giving Palantir a shot above $21.80-ish. If that were the case, this could be signaling that the bulls are gathering momentum in order to fill the next important gap up to the downward sloping 20-day moving average near $23. If we were able to take this trade the way that I am describing it over here, from $22 up to $23, this could represent a 5% profit trade. How about that? That would be a nice trade, right? And if, on the flip side, if this 100-day moving average happens to be broken to the downside, guys, say that $20.50 is broken to the downside with the markets, keep dropping and stuff like that, watch out, because over here we have a big gap down to the 200 DMA near $18.60. So this could also be a potential short in the case of Palantir, the Messi of AI. So these are the two potential scenarios that I can notice over here in the case of PLTR. Let me take a look at the market structure of Palantir. Let me see, PLTR, Palantir. Let me see, Palantir Technologies. Let's see. So on top of this chart, you guys can see the demand or buyers, and at the bottom, you guys can see the supply or sellers. The demand is going down, but the supply is also decreasing and below average. When I say average, I am talking about this dotted line. So I would say that we have some sort of tie over here between buyers and sellers. I don't see a clear imbalance that could be potentially favoring sellers or these sellers of Palantir here. So maybe this stock could be bouncing back up from here, guys. $20.70. Yeah, this is possible. And keep also in mind, guys, and I just told you this. So most of the downwards pressure that we're seeing as of now is over the stocks that have gone up the most year to date, and Palantir is one of those stocks that have gone up a lot. So if the market as a whole remain under pressure, and if the 10-year treasury yield keeps going higher, yeah, maybe Palantir might not be able to hold this upward sloping 100-day moving average, and we could be seeing a test of this 200 DMA maybe, I don't know, anytime soon. Let me see some AVWAPs over here, anchored value weighted average price lines in the case of Palantir. Let me see, what do we see here? PLTR. There you go. Okay, take a look, guys. So over here we have two AVWAPs. We have one AVWAP that comes from Palantir's all-time highs, and this anchored value weighted average price line is signaling as of now $17. So these market participants are making money out of Palantir as of now. But when it comes to this shortest AVWAP that you guys can see over here and that I am pointing out with my mouse, this is an AVWAP that comes from the last earnings report of Palantir. So over here we can see a price of $23. So the average market participant that started a position in Palantir from its last earnings report, so those market participants as of now have an average price of $23. So $23. Well, they are, yeah, I mean, in case of a bounce of Palantir, $23 is going to be an important spot of resistance. And take a look at how $23 happens to coincide with the 20-day moving average. So we have over here the convergence of the 20-day moving average, which happens to be downward sloping, with an AVWAP that comes from the last earnings report of Palantir. So this is a big level of resistance. This would be an area in which I would be fading any rally of Palantir near $23 if we happen to see a relief rally in the case of Palantir. Taiwan Semiconductor, Nicholas is asking, sure, let's go ahead and take a look at TSM. I took a look at the report. You guys know that TSM posted earnings earlier on today, this morning, pre-market. Excuse me, guys. It was a decent report, and they said that the demand for AI-related, chips is like extremely high. I mean, those were the two words the two words that they used. The demand for AI chips is extremely high. But whatever, the markets didn't like the report. Anyhow, because as I just told you guys, we are in some sort of corrective phase, and when the markets are going through these kind of corrective phases, regardless of whatever is being said on an earnings report, your stock can get killed. Even if you surpass expectations and if you pose a good guidance, such as the case of Netflix today. So TSM ended up going down today 4.86%, and it closed the trading session at $132.27. Not a good looking chart. And we can see over here the same situation that we detected and that I told you guys about in the case of Palantir and the SPY itself. So a stock that is trading above both the 200 and the 100 DMA, but on the flip side, the sellers have been making progress in minor timeframes. And why? Well, because TSM is trading below the 20 and the 5-day moving average. And as you guys can see over here, this white line, which is the 5-day moving average, is downward sloping. Not a good looking chart. So how would I be interested in taking a trade on TSM over here? I would like to see TSM, guys, recapturing $132, which happens to be a previous support back from mid-March. If the bulls of TSM recapture $132 and can close candles above that level, and if they can gather momentum above that level, we have this potential gap up to the 5-day moving average that is pretty much coinciding with the 20. The 20 is signaling $140, and the 5-day moving average is signaling $138. So if this were the case, guys, any process of consolidation above 133, 132 approximately, and if we happen to see a bounce from that area and up to $139, pretty much the 5-day moving average, we are looking at a 3.8% profit trade. So this could be a potential trade over here in the case of TSM, or maybe, I don't know, if TSM happens to drop down further. We have a previous support over here near $123, guys. This is a previous support back from mid-February of this year that could be potentially once again acting as such. And take a look at how this upward sloping 100-day moving average, and remember, guys, the slope of any moving average is super important. So the fact that this 100 DMA is upward sloping might help the bulls to find support near $123. Again, this previous area of resistance. So maybe if we happen to see another drop down to $123, that might be an area in which I could be interested in buying the dip in the case of TSM. So in minor timeframes, not a good looking chart. And if we zoom out in major timeframes, yeah, I mean, in major timeframes, TSM doesn't look as bad as it looks in minor timeframes, but we'll see, guys. I don't know. For the bulls, in order to regain technical control of this chart, we need to see TSM trading above the 20-day moving average, $140. So let me see what the market structure of TSM signals as of now. Let me see if we can see any imbalance between buyers and sellers. That could be encouraging. Take a look, guys. The demand is going down and the supply is going higher. Look, demand you guys can see the demand on top of the chart, and at the bottom you guys can see the supply. Clearly, the demand is going down, the supply is kind of rising. So, yeah, watch out for a test of 123.64. Or maybe, guys, if the markets happen to see some sort of relief rally, if the markets as a whole happen to see some sort of relief rally, a recapture of 132 and a process of consolidation above the area could represent a tradable bounce for TSM. And if we take a look at some AV webs, let me see. TSM, Taiwan Semiconductor, let's see. And this stock is pretty much trading at all-time highs, guys. So the only AV web that I can see over here comes from all-time highs, $140. Yeah, so I mean, we don't have a lot of buyers trapped over here because TSM is pretty much trading at all-time highs. it would be very bullish if the bulls can burst above the 20-day moving average that is near $140, and if the bulls at the same time were able to recapture this AV web that comes from all-time highs near $140 as well. So we'll see what happens with TSM. Wish, Context Logic, that's a penny stock, bro, right? Are you trapped over here? Because I don't trade, I mean, yeah, it isn't a penny stock because they carried out a reverse stock split. I don't trade, I mean, this is not a penny stock technically because it is trading 74 cents above $5. But I don't trade, you know, these kind of stocks. I don't know what to tell you here, bro. I don't know. So it closed today above all the moving averages, above the 5, the 20, the 200, and the 100-day moving average. I don't know. I would wait for Wish to potentially being able to make a new higher high, closing, I don't know, 1 or 2 trading sessions above $6, which happens to be a previous higher high and a previous resistance back from early April. And if that were to happen, the 5-day moving average is going to be upward sloping more, which is more favorable for the bulls. So I don't know. I wouldn't touch this stock below $6 approximately. And be careful, guys. The markets are freaking out about the 10-year Treasury yield. And, you know, we are in a corrective phase of the markets. And this company, because I know the company, this is a money-burning machine, a poor, or this is a company that has a very poor, you know, commercial performance and financial performance. So if the markets are going to keep on selling, let's say if the markets are going to keep on trading risk off, this stock doesn't have much room to the upside, okay? Because again, this is a money burning machine company and stuff like that. You guys get the drill, okay? Thoughts on SQQQ? Guys, if you are going to trade SQQQ, this is a leveraged ETF. You cannot analyze this technical chart. This is an inverse ETF that does the opposite relative to the Qs. So you cannot make any trading decisions based on the technical chart of SQQQ. And by the way, you should also know, guys, that this is a leveraged ETF. Do you guys know what does a leveraged ETF imply? Let's try to provide you guys with valuable information. What is the problem of trading a leveraged ETF? If you guys don't happen to know the answer, just let me know. I will let you guys know. Okay, let's see. Does anyone know what is the problem of trading leveraged ETFs? No? Okay. So if you read the prospectus of this ETF, you're going to clearly see that this instrument is meant only and exclusively for either day trading or overnight trading. This is an ETF that decays over time. So if you guys hold this ETF for 1 or 2 or 3 or 4 weeks or something like that, it loses value. Okay, Ivan, correct. It's your money, correct. So take a look at what is going on over here. This is an inverse ETF relative to the Qs, and the Qs, the triple Qs, you guys know that is an inverse. Sorry, is an ETF of the Nasdaq 100. So over here, we are about to see a test of the 100-day moving average. $12.53. $12.53, correct. If I pull up over here, guys, a chart of the Qs, what is going on over here? Take a look. And I already told you guys this. Actually, let me see. Yeah, we were inches away today, in the case of the Qs, of seeing a test of the 100-day moving average. This is a very important area of potential support for the Qs. So say that tomorrow you guys see the Qs trading slightly above this 100-day moving average, so above 421.50, say, okay? And if the markets keep dropping, because I don't know, for whatever reason, because Israel attacked Iran, and the 10-year Treasury yield keeps going higher, and the Fed is going to remain higher for longer. You guys know what I'm talking about. If the Qs break this 100-day moving average to the downside, you guys can easily start a position on SQQQ. But don't make this mistake, guys. Don't pull up a chart of the SQQQ and try to analyze this. Don't analyze this. Because in the case of the SQQQ, guys, the interaction between buyers and sellers, or let me rephrase that. The interaction of buyers and sellers in the case of the SQQQ is non-important. What moves the SQQQ is the opposite relative to whatever the Qs do. You see what I'm saying? So thoughts on SQQQ? I don't know. Keep an eye on the Qs, and let's see if the Nasdaq 100 and the QQQ breaks this 100-day moving average to the downside. That would be a green light in order to start a position on SQQQ. And please only trade SQQQ for day trades or overnight trades. UNH, healthcare. Sure, let's go ahead and take a look at UNH, United Health. Okay. Wow, take a look at United Health going higher. It went up today 2.96%, and it closed the trading session at $493.18. I think, guys, that the healthcare sector went down today. Take a look. This is super positive for United Health, guys. So this is a, let's say, this is a sample, a display of technical strength. So the sector in which United Health trades in, which is healthcare, XLV is the ticker symbol of the ETF, went down today, whereas United Health, that happens to be a very important stock, inside that sector went up today 2.96%. And by the way, this is another proof of the risk-off mode that we are seeing as of now in the markets. So you guys should know that in the markets we have, for the most part, three defensive sectors: healthcare, consumer staples, and utilities. So whenever the markets are freaking out because something wrong is going on, and I don't know, something very bad is going to happen with the economy and whatever. So whenever the markets feel super worried about something very bad happening or going on in the economy, they are very likely to go after these three sectors: utilities, healthcare, and consumer staples. So that might be a favorable, setup for United Health. We have a big level of potential supply over here, or overhead resistance for United Health, with the convergence of the 100 and the 200-day moving average near $508. I mean, I don't know, guys. I would be potentially fading this rip over here near $508. And on the flip side, if you guys happen to see UNH keep going higher and consolidating above these two moving averages, then there's more room to the downside, to the upside, potentially over here, guys. The next important gap would be up to $530, which happens to be a previous resistance back from mid-February of this year. So if we were able to take this trade, guys, the way that I am describing it over here, say UNH consolidates above $509, from $509 up to $532, this could represent a 4% profit trade. So nothing to sneeze at over here in the case of United Health. So be careful, guys. It is approaching a potential area from which this rally could be faded. $508 and above $508. Wow, the bulls are going to be the bulls are going to be in absolute control of this technical chart. In which case, a test of $530 could be in the cards for United Health. Another scenario, why not? What about a process of consolidation above 495? United Health closed today the trading session at $493, guys. So $495 is a previous resistance at which UNH failed on multiple occasions recently. So any process of consolidation above this previous area of resistance could be signaling that the bulls are gathering momentum in order to fill this gap up to this potential gap up to $508. From $494 up to $508, this could represent a 2.4% profit trade. So good job for the bulls of UNH over here. Let me see the market structure of UNH. Does it convalidate this push to the upside? Let me see UNH. What do we have here? Let me see. Take a look. So the demand is rising, but at the same time, the supply is also rising and above average. So buyers are increasing in number, but also sellers are increasing in number. So if this gap up to 508 gets filled, and if I happen to confirm that the bulls failed at bursting above 508, I would be fading this rally on UNH. If we take a look at some AV webs, let me see what AV webs do I have in the case of UNH. Let me see. Do we have a lot of buyers trapped over here? Let's see. So, yeah, look, guys. So I have an AV web, an in-court volume weighted average price line that comes from the all-time highs of United Health, which was hit in November of 2022. And these market participants that started position back in 2022 when United Health hit $560 approximately. So these market participants, as of now, they have an average price of $497. If we reconcile that level with the area that I just told you guys about, 495. So that's it, guys. If UNH consolidates above $495, $497, maybe $508 could be in the cards sooner rather than later. So an interesting spot for UNH here, slightly above $496 approximately. Okay, so what other stock do you guys want me to go over? And remember, guys, when I go live for you guys on Thursdays, I already streamed for the people of my Patreon for 6 hours and 30 minutes in a row, because I do live stream throughout the trading sessions via YouTube Live. So when I go live for you guys, I'm super exhausted. So if you notice any mistakes here and there, I do apologize for that, but wow. I really have to make an effort in order to go live for you guys. 5:37 p.m. Let me see. So we are 53 minutes in. So, excuse me, guys. Let's go over an NVDA. What do you guys think about NVDA, guys? Take a look at NVDA. It went up today 0.76% and it closed the trading session at $846. So in the case of NVIDIA, guys, we have officially a correction. NVIDIA closed today's trading session 13% below its all-time highs. Is there more downside in the cards for NVIDIA? Want it to come down more? Yeah, it could happen. So take a look, guys. As of now, except for United Health, the technical patterns that we are seeing look alike. Take a look at NVIDIA. The same situation relative to the SPY and Palantir, trading below the 20 and the 5-day moving average. The 5-day moving average is starting to downward slope, which is not, which isn't positive. In minor time frames, but on the flip side, we have an upward sloping 200-day moving average and also an upward sloping 100-day moving average. So this implies that we can make the case that in major time frames, buyers are in control over here, but in minor time frames, sellers are making a decent progress in the case of NVIDIA. Okay, to the upside, guys, it would be very bullish if the bulls can recapture the 20-day moving average near $886. If that were to happen, and if the bulls can consolidate above $886, this could be signaling that the next important gap up to $923 could be potentially getting filled. $923 happens to be a previous resistance back from early April. If we were able to take this trade the way that I am describing it over here, guys, so say from $893 approximately up to, as I just told you guys, $923, this could represent a 3% profit trade. Another potential trade over here, guys, would be a recapture of the 5-day moving average. So a process of consolidation of NVDA above $860. And take a look, guys, at how the bulls were enabled yesterday to take out this white line, the 5-day moving average. They failed right up there. And today we saw another test of this white line, again, the 5-day moving average, on this occasion at $860, and the bulls were able to close candles above this area. So this 5-day moving average is going to be very important in the upcoming trading sessions. Any process of consolidation above the 5-day could be signaling a potential test of at least the 20-day moving average that, as of today's close, is signaling $887 approximately. But what happens if NVIDIA keeps dropping, guys? So would you be interested in buying the dip at $770? Would any of you guys would be buying the dip here? This could be a potential target to the downside, guys. $770 is a previous support back from late February that could be acting as such once again. Why not? I think, and taking into account the commercial guidance that TSM posted today, saying that the demand for artificial intelligence chips is extremely high, I think that they are going to end up buying this dip sooner rather than later, in my opinion, guys. So at $773, I would be getting some NVIDIA calls, guys. Yeah, I would give it a shot over here. And if NVIDIA happens to drop down to 770, say, let's just round it up, $770, this would represent a 20% drop, guys. 20% drop. So, who knows? Maybe $770. Let me take a look at the market structure of NVIDIA. So let me see if we can see any imbalance between buyers and sellers over here that could favor any of those. Let's see. Take a look, guys. The market structure of NVIDIA is constructive. Remember, on top of this chart, you guys can see the demand, and at the bottom, you guys can see the supply. Take a look. The demand is rising, guys, and the supply is going down. Watch out for NVIDIA, guys, recapturing this 5-day moving average near $860. That would be bullish. Yeah. And could be signaling a potential test of $887 approximately. And in the case of the AV-WAPs, guys, let me pull up here once again. Anchor volume weighted average price lines here. AV-WAP, NVIDIA. Let me see. NVIDIA Corporation. Take a look, guys. So the buyers that come from the all-time high of NVIDIA have an average price of $890. Interesting. Take a look, guys. And the buyers that come from the last earnings report of NVIDIA, or the market participants that started positions of NVIDIA since this company posted its last earnings report back in late February. So they have an average price of $860. Take a look, guys. So I already showed you that the 5-day moving average is sitting at $860. Well, at $860, then we have the convergence of the AV-WAP that comes from the last earnings report of NVIDIA with the 5-day moving average. So it would be positive for the bulls being able to consolidate above $860. That could be suggesting more upside for NVIDIA, and we can say that the only buyers that are trapped at upper levels in the case of NVDA over here, and that could be potentially representing an overhead supply zone. So those buyers are trapped near $890. So above $890. And yeah, take a look, guys. The 20-day moving average is signaling as of now $887. So above $890. And if we happen to see a general bounce in the markets and stuff like that, yeah, and NVIDIA would be looking bullish, or 100% bullish, I would say, once again. Want it to come down more? Yeah, I mean, it could. Why not? So, guys, what are your thoughts on Tessie? Please let me know. Is any of you interested in buying the dip on Tessie? Tessie post earnings on Tuesday. Wow, what a disaster, guys. What a disaster. So Tesla went down today once again, 3.55%, and it closed the trading session at $149.93. What a epic disaster, guys. And yeah, they post earnings on Tuesday. Let me take a look at the expected move of Tessie, guys. Let me pull up here Tessie. Let me see. So Tessie. Why don't I have this available? I don't have the score available. What is going on here? We should have it available. So here I had an issue, guys, with earnings whispers. It locked me out. I have to log in once again. Wow, take a look at the expectations of the markets, guys. 24%. Sorry, this would be like 80% or 75% of the market participants, or I would say 75% of earnings whisper subscribers believe that Tessie will not exceed expectations when it comes to EPS and revenue and stuff like that. And 60% or near 60% believe that this stock is going to go down once the report comes out. I have a, okay, say that Tesla keeps getting killed, guys. I'm not gonna waste any time doing any technical analysis here, guys, because this chart is 100% broken from a technical standpoint. Below all the moving averages, downward sloping 200, downward sloping 100, downward sloping 20-day moving average. The same goes for the 5-day moving average. I have a number for you guys. If Tesla hits $137, say tomorrow, say, I don't know, next week, I might give it a shot if I happen to confirm support down there, obviously, guys. I would like to see 137 being broken to the downside and immediately after that recaptured by the bulls. 137 for a bounce in the case of Tesla. And Ivan is telling me that it is in your long-term portfolio. Really, really feeling the pain. You're going to feel some more pain, bro. Yeah. And why, guys? And I have been telling you this over and over again when we go over Tessie. We have an ocean of bag holders over here, all over the place, such as Ivan. A lot of bag holders, a lot of people losing money with the stock of this company. So we have, I don't know, like too many areas of overhead supplies above the current price of Tesla. So whenever, I don't know, some positive catalyst occurs and maybe, the markets start to believe once again in the Tesla story. And if we happen to see, once again, we don't know, guys, a sustainable process of recovery of Tesla, we are going to see the stock of this company pulling back from multiple levels on its way up. Because we have just too many buyers trapped all over the place. So this is going to be a tough one. And this next earnings report is going to be ugly. And believe me, guys, I know this stock. I know this stock very well. I am an owner of a Model 3 myself. I own some shares of Tesla near $100, $95. But I sold a covered call, and as of now, I have those shares under a covered call. And I don't know. This is a tough one, guys. And believe me, this stock is trading. I mean, Tesla has gone down this year, guys, 40% year to date. This stock is down 40% year to date. And the valuation of this company is still super expensive. So I don't know what is going to happen here, but I might give it a shot near $137 if we happen to see that price soon. Maybe after the earnings report of Tesla. Who knows? We'll see. Okay, guys, I think that I am going to wrap it up. We are, let me see. Yeah, an hour and 5 minutes in. So let's wrap it up, guys. Thank you very much. Thank you for watching. Thank you for listening. I will see you guys tomorrow on Discord. We have OPEX, monthly options expiration. So that's a day in which usually weird stuff happens. And good work today, guys. Good job today. Keep it up. Thanks. See you guys on Discord, okay? Take care. Enjoy the rest of your day. Bye-bye. Thanks. Not a problem. Take care, guys.